Hello guys, welcome back to my channel. This is Matrixfx here, and today I want to explain my trading plan for you guys and show you my trading journal. So let's hop straight into the video. Please, if you're enjoying the content, please do well to like and subscribe. It will help the channel grow and also help the algorithm suggest our videos from this channel to other YouTube users. So let's go straight into it, guys. Now what I have here is a word presentation, should I call it so? Yeah, a word presentation of the trading plan. So as you can see, Matrixfx strategy, my A strategy. So this is the current one I'm using. So I think I've drifted from most of my strategies to more of this one because it's quite simple and and it's easy. So this is from the ICT 2022 mentorship, and if you have gone through it, you already understand and have extensive ideas of what I'm going to talk about. But for those of you that haven't gone through that mentorship, I will be linking the description for the videos that I'm going to refer to, because I can't be explaining everything here. There are so many concepts here that you need to understand. So what I'll be doing is that I'll be giving you a brief knowledge, then I'll link the videos for the ICT content itself. So for the ICT videos, you can go to ICT's YouTube channel and watch them. So let's go straight into it, guys. So first of all, you can see the rules. The first thing there is the top-down analysis. Now for top-down analysis, whatever kind of trader you are, provided you've had trading experience, you understand, you will know what top-down analysis. Top-down analysis simply means going from the higher time frame to the lower time frame. So as you can see here, it says weekly buyers, daily buyers, and 4-hour target. So I am a day trader, so this is my higher time frame. I don't normally go to the monthly because there's no much data there that I want to be looking at. So as I am a day trader, my highest time frame so far is my weekly, getting my weekly buyers, then my daily buyers, then probably my 4-hour target for that day. So that is for the top-down analysis. Now if you want to understand it extensively, the ICT talked about it in his core content, I think month 12. All the videos there are about, like, he dedicated a full month to talk about top-down analysis. So that's how important it is. So you need to be able to understand where you are in the market. So ICT talked about it also in the market maker market maker playlist. You see there, he talked about it there. So the next thing is identification of liquidity pools and levels. So the liquidity pools and levels here refer to your PD array, and the PD array, I mean like your previous day high and low, your Asian high and low, your short-term high and low, your old order block, your rejection block, stuff of that nature. So it simply means like the level which you are watching out for, your liquidity level. So it can be like a previous day high, you want the market to sweep above a previous day high, or above the Asian high, or above a short-term high, or tap into an order block. So things like that. So after that, the place ICT talked about the liquidity pools, void, fair value gaps, and stuff like that. I think mostly in the core content, but I think he talked about it also in the Forex Primer video. I'm not sure, but I'll link everything down in the description, so you get everything down in the description for extensive knowledge. Then next we have identification of Q zone, news factor, and midnight. So if you are an ICT student, you already know that ICT advises his student not to trade during the news. But I won't say I am a full ICT student per se, because I've been trading even before I discovered ICT's content. So for the Q zone, we all know the London Q zone, the London close Q zone, the New York session, stuff like that. So that is what the Q zone, you want to mark out your Q zone so that you know when the time you start looking for your setup. Me specifically, I look for most of my setup in the London open Q zone, and I close most of my position towards the New York PM session. So for the midnight, ICT advises in this is 2022 mentorship, because I think this is the first time we talked about it, the New York midnight candle. So when you set your trading view to New York, or if you are using an MT4, you just have to convert the time for your server to New York time, then you get the midnight open candle for the day. So you also, I think you highlight that in the chat also. Now it says here that you wait for the market to trade through or to number 2, and number 2 being your liquidity level. So you wait for the market to trade to maybe your order block or above your short-term high or maybe above your Asian low. So this is very important, guys, because if the market does not do this, you don't look for setup. You only look for setup when the market has gotten to your level. That's the level you want to sell or buy from. So you don't just come to the chart anytime and look for a setup and just take it. No. You have to wait for the market to trade to or through your level. So if it's trading through your level, it's something like a short-term high, an Asian high, stuff like that, just to sweep liquidity. So if it has finished sweeping liquidity up there, to present a setup for you to trade. So after you have waited for the market to trade to your level, so when that has happened, you look for a reversal. Even in the trend continuing way, if you are trading with the trend also, it is still the same thing, because the market will first of all go counter trend. So you look for where the market reverses back with the trend. Then as it's reversing, you want to make sure that it breaks structure of a short-term high or a short-term low with an imbalance. So you want to see a break of structure, but not just a break of structure. It doesn't have to be slow. It has to be very fast with an imbalance with, I think, huge candles. Let me say it that way, because I'm going to explain what the imbalance is in the I think the third or fourth part of this series. But for if you want to know what the imbalance means, it's a fair value gap. But if you want to learn from the horse's mouth, I'll say you should watch the 2022 mentorship. So ICT talked about it there. Now, also, in case I didn't mention it, for the kill zones and the news factor and stuff of that nature, ICT talked about it in the market maker primer video, I think, yeah, and the core content in 2022 mentorship. I'm going to link everything down in the description, guys. So let's continue. Now you want to quantify the move or the leg to get the premium and discount level. Now, for those of you who don't know about what premium and discount level are, I see talked about it in his core content, but he didn't really go in depth with it. So, but still, it's very important. Now, if you want to sell, you want to sell at premium. This is not really correct, but I'll do the correction later. You want to sell at premium to cover your position or to close your position at discount. And if you are buying, you want to buy at discount and cover your position at premium level. So that's what it means. So it says here, using the fib or Ghana's box, get the imbalance close to or at optimal trade entry level. So I just wrote here close to optimal trade entry or 50% level. So that is that. So I think I'll still link a video to explain this, but it simply means to just quantify the leg to get your premium and discount. Now he said using the imbalance, identify your entry, SL and TP. So as a trader, before you take any trade, you have to know your SL, your TP, to know at least the RR, what you are risking in a trade, to know if the trade is worth taking. So in this situation, the trade, your SL will have to be below or above structure with a TP not less than 3RR, and you'll be aiming for the lowest hanging fruits. So I think that is also understandable. Now the SMT divergence in a closely related pair is a bonus. So closely related pair are like the EUGU to the dollar index, or the NZD Aussie to the dollar index also. All these pairs are inversely related to the dollar index. So when the dollar index is going high, all these pairs will be going lower. Now for pairs where USD is the quote currency, those ones are correlated. So that's to say when the dollar is going higher, those pairs too will be going higher. So for the risk management part of this strategy, so my risk on bias and counter bias. So when I'm going with the bias, I risk 1% mask, and when I'm going counter bias is 0.8. The reason being that when I'm going with a bias, I will have more confluence to the market direction than when now it says all trade except swing trade must be closed on or before 6 p.m. EST, which is New York time, and swing trades should be at break even before the end of true day, which is the 12 o'clock. So before the 12 o'clock, which is the midnight of New York, I must have broken even for the swing trade. Now, day trade can be re-entered during the New York session or New York PM session. So let's say I take a trade during the New York session, during the London session, sorry, and let's say I was not completely filled. Let's say I use 0.5% of my account, then I can enter another trade if the market presents itself during the New York session. I can enter another trade. So if it doesn't, if it presents itself during the New York PM session, same thing, I can enter there. That is that. And also, if I miss the London move, I can also take the New York move. So lastly, it says no FOMO. Sorry about that. Lastly, it says no FOMO. So FOMO means fear of missing out. So I don't do anything that concerns the fear of missing out. You can see I highlighted it. I made it really bold so that whenever I see it, it will just stick to me. So I'm very fond of FOMOing, especially when I was trading the SMC, Smart Money Concept. When I was trading that, I used to FOMO a lot. Sometimes when I don't come to chat early, I come and I see that the market has already moved from my entry. You see me just looking for anywhere to enter with big stop loss. Sometimes I won't even manage my risks, stuff like that. But that was then when I was still a beginner. After some time, I just grew to understand the market. But I still do FOMO. It's something that almost every trader battles with. So I still FOMO time to time. Let me not lie to you. So I think that is all for this video, guys. In the next video, I'll be explaining the techniques. There are two techniques, the field technique and the sweep technique. So I'll be explaining it in the next video. So stay tuned, guys. Now, I think I forgot to explain some things here. So as you can see here, I wrote the liquidity pools and levels identified in the 1 hour to 15-minute chart too. Now, when you're waiting for the market to trade to your liquidity pools or your liquidity level, you want them to trade to the liquidity level highlighted in the 1 hour to 15 minutes too, because within the ones in the higher time frame, they are most of the times they will be there also in the 15 minutes to 1 hour time frame, which is the lower time frame, because price is really fractal. Whatever you see on the higher time frame is also on the lower time frame. Now it says for the reversal and the break of structure with a short-term high and short-term low with imbalance, this should be seen in the 5, 4, 3, 2, and 1 minute time frame, which is your entry time frame. So this is for your entry. This is particularly for your entry. So I think that is everything for the video, guys. Stay tuned, keep on watching. If you enjoyed the video, please do well to like and subscribe. Thank you, and I'll see you in the next video. Goodbye.